What's up, guys? Welcome back. Today we are going to break down my entire investment portfolio, valued at just under $150,000. I think this is an important video to make because right now I'm making tons of videos on options and dividend portfolios, and I get so many questions from new subscribers that don't know the full picture. I'm coming up on 3 years here on YouTube, coming up on Friday, and there is a large foundation of investments that happened long before the dividend portfolio and options even came into the picture. And I get so many questions about my retirement accounts and things like that, so I just want to answer all of them right here in one place so that if you do have any questions, they'll be answered. I'm also going to break down the different percentages of like my 403b versus my entire investment portfolio and things like that. I'm also going to answer a really popular question I get, like, why don't I invest in like a Roth 403b, which is the same as like a 401k? Like, why do I choose to do the regular one when you have the option for the Roth? Who might want to do that? I want to answer that question as well for you. So the first thing that I focus on maxing out and the first thing that I invested in was my Roth IRA. Now, if you have a 401k with an employee match, that's always my recommendation, like at least get that match. But for me, I don't have that match. So the Roth IRA is the first thing that I max out. And at this point, I'm able to max it out on the first of every year. A couple years back, it took me a little bit of time, but now I can max out on the first of the year, and then I do not think about it for the entire year. So my entire Roth IRA is VTSAX. It always has been. It always will be. It is my bread and butter, guys. If you do not know about VTSAX, it is the Vanguard Total Stock Market Index Fund right here. Pretty low expense ratio right now at 0.04, and essentially it tracks the entire stock market. So when you own VTSAX, you could tell your friends you own every single company inside the stock market. Now, a huge question I get all the time is, why do I go the total stock market over just like an S&P 500? Guys, the S&P 500 in this, I've done videos on in the past, they're about the same. I personally like to have that total exposure. I like to have those small emerging type companies as well and get a little bit of my hands in that area. That's kind of really the only reason I like to diversify amongst a broader spectrum, and that's kind of why I go with VTSAX. Pretty much everything about VTSAX and its similar S&P 500 fund, they're going to be virtually identical. Now, VTSAX comes with its downsides, like you need an initial investment of $3,000. If you don't, you just go with its ETF, which is VTI. You can do that. I've done a video comparing both of those, the pros and cons of going VTSAX versus VTI, but you are going to see a lot of VTSAX inside this portfolio. The Roth IRA is currently valued at $24,111, which comes to about 16.7% of my entire investment portfolio. Would that be bigger if it could be? It would. But with the cap on it, and the cap really not really moving the last couple years, I can only put $6,000 in there every single year. But guys, the Roth IRA really should be the staple and the backbone of your retirement future. And if you happen to make too much money to be into the Roth IRA, you could do something called the backdoor Roth. I've made a video about it. I've never had to use the backdoor Roth, but in 2021, I will be. So when we get to about the first of the year, I will be doing a backdoor Roth. I'll show you exactly how I do it, every step as I do it. So subscribe, and in the first of the year, we'll do that together if you make too much money and you're over the income limit for the Roth IRA. And another great reason to subscribe is so I can get this freaking haircut at 50K. I'm trying to get out of this bet, but right now, 50K, this thing's going to keep on going. The next thing I focus on is my 457. Now, guys, the 457, I've talked about it as like the holy grail of retirement funds. Now, not everybody has access to it. If you have a 403b, there's a very good chance that you do, and you probably don't know about it. I was contributing to my 403b for like 15 years before I knew that the 457 even existed. But just like anything with 401ks, 403bs, and 457s, you have to make sure that your fees are low. For me, my fees on my 457 are virtually nothing. I'm going to show you the fund that I'm in. I have my 457 through the New York State Deferred Compensation, and that's the only option I had. So this made it really easy. I didn't have any options, and I chose, just like my Roth, an index fund. Now, they didn't have a total stock market index fund like VTSAX, but they did have something that was very, very similar to an S&P 500 index fund. Here's a look at that fund. It's the New York State Deferred Compensation Board Equity Index. It, like I said, the benchmark S&P 500, mostly US stocks, a little bit of non-stocks, no bonds, no cash, no others. Their top 10 holdings are going to be just like any other S&P 500 fund you've ever seen. Microsoft, Apple, right? And I don't know when this, as of 6:30, so it's actually pretty up to date, not so bad. But the thing I want to show you right here, guys, annual expense, 0.01%. That means for every $1,000 invested, I pay only 10 cents. And the New York State Deferred Compensation, they only take $60 from me every single year, regardless of what my account is. It was lower than that when my account was smaller, but now it's capped. And like I said, that is an awesome, awesome fund. If you guys want to look, you can Google this fund. It's BlackRock. It's under BlackRock. Then you can go in and see exactly what the objectives and the strategies. But guys, once again, index funds, index fund investing, S&P 500, total stock market index fund, you cannot go wrong. And the beautiful thing about this is it is tax deferred. Okay, so when it comes to the option of having a Roth or a tax deferred, guys, it's simple as this for me. I am pretty confident, very, very confident actually, that I'm going to make less money in retirement on the books than I do right now. So I'm going to defer those taxes. I'm going to pay those taxes later on when my tax rate is less. Now, do I know if it's going to be less or tax is going to go up? Who knows? We don't know. But what I do know right now is that for the tax bracket that I'm in, I'll defer them, I'll roll the dice, and I'll figure it out later. Every single time I put money into this, I save that money in taxes. So think about, like, if you're in a 25% tax bracket, every dollar that you invest, you get to keep a quarter. That goes back into your pocket, and you can extrapolate that amongst thousands of dollars. It's a really, really good deal. But if you're young and you're making no money right now and you're in a really low tax bracket, yeah, you might want to go that Roth path, right? Because the Roth IRA, you're only getting $6,000. But if you have access to a Roth 401k, a Roth 403b, or a Roth 4057, now you can start chunking away a ton of money post-tax. It's going to grow tax-free. And then maybe on later in your career when you start to make more money, then maybe you switch off the Roth and go into something like I'm doing. My 457 right now is coming in at $31,424. That is 21.7% of my total investment portfolio. And two questions about this that I get all the time. Why the 457 before the 403b? Well, there's actually two things that made it very, very easy for me. Number one, the fees were less on my 457 than they were on my 403b. Also, with a 457, there is no penalty for taking your money out before 59.5, like there is with a 401k or a 403b, once you leave your job. They call it separation of service. Once I leave and resign from my job, I can take that money. I'm going to pay taxes on it because I'm tax deferred, but I do not need to wait till I'm 59.5. So that's great for somebody like me that doesn't plan on working till I'm 60. I can build this up right now, and then when I retire early, I can use that and pull from it and let my other investments grow until I can take those funds at 60. Something else that you might have heard me say is that I have this maxed out already. For the first portion of the year, guys, I take zero paycheck. All the money that I get goes to my union dues and all those other things. But every single available dollar I have, I put in and I max this out as fast as possible. Time in the market is better than timing the market. And like, Brad, well, how the heck do you live when you're not taking a paycheck? There's two ways. One, you guys see my passive income. I just made passive income. I make a little bit of passive income here and there every single month, which helps me live. But also in the time that I am done paying it off. So this year was in the beginning of June, coincidentally, right when I started my dividend portfolio. From June until Christmas, I am going to be saving a large amount of cash. In that video that I just posted about passive income, so many people are like, whoa, you made a lot of money in interest. You must be holding a lot of cash. The reason I hold that much cash is because I'm going to use that cash to live off of from the new year until I'm done maxing that out in June of next year. And then I'm going to repeat that process. Next is my 403b, and I actually have two 403bs, and this accounts for essentially 50% of my investment portfolio. So a little over $70,000. Why do I have two, you ask? Well, I had one from earlier in my careers before I ever knew about personal finance, when I first started my career in teaching about 15 years ago. And I've stopped contributing to that because it was with Voya and I was getting my face kicked in fees. Voya is an insurance company. If you have your 403b with Voya, please DM me. Please contact me. I have to get you out of Voya. I promise you, you have a better something available. You have a better choice than Voya. Sorry, Voya, your fees just suck. You are an insurance company. You are not a financial institution. Regardless of if you want to put your little orange squirrel on commercials and you want to tell people that you're really good for them, with my experience, I just got throat punched. And I couldn't close it out because they wanted to charge me thousands of dollars to move into my current 403b. So to be honest, it's just been sitting there for the last 5 years, growing. I haven't touched it. I logged on today for the first time in a long time just to see what was in there. And I'll show you what fund I have all my money inside Voya first. So the Voya Fund comes in at $37,795. That's what I have in there. And I bet you if I gave you $1, you could tell me what type of investment I have in there. I have the Fidelity VIP Index 500 Portfolio Initial Class. This is a large blend S&P 500 index fund. This was also updated on June 30th. Largely US stocks, a little bit of non-US, no bonds, and just a little bit of cash. Once again, we see the same things we saw with that other S&P 500, Microsoft, Apple, Amazon, Facebook. All of these are going to be at the top. This is what I have my money in. Inside Voya, I have a Fidelity Fund because that was the best of the best. Let me see if they show the expense ratio on here. So 0.1 expense ratio, not too bad, guys. I can take that, especially with the management fees, 0.15. This was enough for me to at least leave it in there and not pull the money out. But it was really the back end fees that Voya charged me outside this fund and the expense ratio of this fund, which is what really made me angry and got out. Once again, guys, if you're stuck in Voya, please DM me. We need to get on a call and we need to figure this out. The 403b that I'm currently in is actually with a company called Aspire. Now, Aspire, they pretty much work with other investment firms and they allow you to invest in a large amount of things. So if you have a 403b, there's a very good chance that Aspire is going to be one of those options. And the reason I chose Aspire is because I can invest in VTSAX. And that is what all of my 403b money goes into. VTSAX, like we saw before, in my Roth IRA. That 403b with VTSAX is at $34,568. It is also maxed out for the year. I do the exact same thing with my 457, but I do contribute to this after my 457 just because I wasn't always able to max both of them out. Now, with a little bit of time, a little bit of hard work, and raising my contributions every quarter or so, now I don't even notice it out of my paycheck. Don't look at that amount as $19,500 and be like, how am I ever going to invest that? Start at 10 and then raise it $100 every month. Raise it $1,000 every quarter. Do what you can, and over time, you're not going to notice that decrease in your paycheck, I promise. I haven't, quote, taken a raise in 5 years because every single time I got a raise, I took that difference of the raise and I either applied it to my debt or I boosted my contributions to my retirement. And last, guys, and if you've been watching my channel for the last couple months, you'd think that this was 100% of my portfolio. It turns out it's only about 11% of my entire investment portfolio, and that's in individual stocks with my growth stocks as well as my dividend portfolio. These individual stocks are skewed amongst all of the brokerage. A majority of them is in Robinhood. That's what I've been with for the longest. That's what you guys see the videos. And when I do videos, mostly of them are on Robinhood. That's where I'm trading my options and things like that. If you want to see some videos like that, just follow along, subscribe to the channel. I get on Robinhood, I show my dividend portfolio. That's pretty much most of my content right now because it's doing so well and people are so interested in it. And they're, that's the content I'm going to make. I'm here for you. But I also dabble in Webull and M1 Finance. I think they're both great platforms. They each have their own pros and cons, but people always ask me about them, so I wanted to speak intelligently about them. So I made sure that I talked about it, and I made sure that I got in there and I tried it before I came on here and gave my opinion about it. All those brokerages, they come in at $16,619, and that is my entire investment portfolio. So almost 90%, guys, is index funds, VTSAX and S&P 500. I got that guy. This is my investment Bible, guys. The Simple Path to Wealth by J.L. Collins. If you've never read it, please, there's a link in the description. If you're new to investing and you know you should be going the index fund route, just give it a read. I promise. If you think it's the worst book in the world, let me know and I'll find somebody that will buy it from you. It is an amazing, amazing book. But guys, other than that, there's only 20 individual stocks in there, and that's kind of like my 10% money. You could take 10% of your wealth, and I'm learning different options. I'm learning about stocks. I enjoy it. It's kind of a hobby. But please do not think that a majority of my net worth is tied up in individual stocks. I advocate against that, and I advocate for not even having a brokerage account. I made videos about this months and months ago about how I would not own a brokerage account until everything else was maxed, and that is still true. There's other things that I max that aren't necessarily investments, like my Flex account, which pays for my child care, which is tax deferred as well. So guys, please make index funds the backbone of your investing. I promise it's going to be best for the long run over time, and then dabble in individual stocks and have some fun with them, and treat it as more of a hobby with a small percentage of your net worth. If you have any questions about this, guys, please, I'm an open book. Always get in touch with me. If you want more in-depth looks at what I'm buying, what I'm selling, my dividend portfolios, my investment portfolios, my options trades, inside my Discord for my Patreon members, guys, I literally post about my options on a daily, regular basis. You can start that journey with a little bit of support. $2 a month get you into that Discord chat. Most people have been upgrading and getting into other chats, so that might be something to consider if you want direct contact with me and more of the personal side of what I'm doing. Up here, I'll leave a playlist of why I love Vanguard so much, and down here, we'll look at the other side, my dividend portfolio. And until I see you guys on the next one, stay positive, work really, really hard, always be kind to other people. Hope you have yourself an amazing day and an even better tomorrow.